If you're a business owner and you're looking to sell, how does selling a business work and what can you do about it? This is a fantastic question. I'm Scott Sylvan, company live from Kaanapali, Maui, on a perfect day to talk about sales and business and a perfect day to talk about you for consulting secrets. All right, you may be at the point where you're sitting looking like, hey, I want to sell my company. I want to make my retirement. I want to move on. I want to do something different. Well, there's going to be one of two ways that a company is going to come in and purchase you, or an investor. What they're going to do is they're going to come in and they may purchase your assets. They may look and say, I just want everything that the company has to offer. I don't need the corporation. I don't need the LLC. I don't need the subchapter. I just want to come in and I want to take what you're doing. I want to combine it with my product or my service or put it under my flag, and you retain all of the information that goes along with it, minus the client list. So that means whatever money that I pay you as an investor, you're going to use to pay off loans, because somebody who is purchasing a company wants a company that's coming in debt-free. Okay, that's the thing. If I'm going to sell you a company today, it's my role and responsibility to hand you over a company that's turnkey and debt-free from day one. And you can do that with assets, right? That's a very common way that most companies structure the deal. They may say, hey, here's what we want to do to pay for these assets. We're going to give you a mix of cash. We're going to give you a mix of earnout. We're going to give you a mix of roles and responsibilities that you're going to have to do. And if you meet all those parameters as a subject to, then we will give you all the money. So for easy math, this is a very standard deal that's 80-20 deal. 80% cash upon closing. So if it was a $100 deal, they would give you $80 cash, and then there would be a holdback of seller financing as a rep and warranty of $20. And it might be paid out over 2 years, might be paid out over 3 years. It's just to say, hey, everything that we told you that was going to happen, happened. Now, here's the thing. If you're looking to sell your business in the next 0 to 36 months and you want some help, you should reach out to my team at the Deal Hotline, 888-DEAL-919, 888-DEAL-919. And a member of my team will get back to you. So here's the thing. If you're doing at least $2 million a year in revenue and a 10% profit margin, we can help. And no deal is too big. Now, here's the other way that a structured deal may happen. When somebody comes in and purchases all the stock, right? They're literally buying everything about the company. They're coming in and they're saying, hey, I want to buy you, your company, and I want everything. I want to keep the bank accounts. I want to keep the credit cards. I want all the intellectual property. I want everything that goes along with this company, with the from start to finish, or as they say in some places, soup to nuts. I'm literally buying anything and everything that has to do with this company. There's a little bit more risk because if something happens, they now own that risk, whether it's an IRS audit, whether it is a possible legal issue with an employee or a legal issue with a vendor or a legal issue with a client. They're literally assuming all the risk because they're buying all the stock. So sometimes what will happen is, because there's a risk versus reward factor, a company may come to you and say, hey, here's the thing. For your company, for asset purchase, I'll give you $125 with a 20% earnout, which means today we are going to give you $85 and you're going to earn out the rest of your money. On a stock purchase, they may come to you and go, hey, business owner, because we're assuming risk, and because we're putting more of our skin in the game and there are some liabilities now on us, instead of us handing you a check for $125, we'll give you a check for $110. And so you're sitting here, hey, Scott, which way is right? Well, that's going to be dependent upon you, your tax situation, what your legal representation says, what your accounting representation says, because I'm not an accountant, doctor, marriage therapist, but I am a taco enthusiast, right? So there is a way for you to absolutely sell your business, but it's typically going to be one of two ways. It's going to be an asset purchase, or it's going to be a stock purchase. And you may have to have a qualified conversation, because I'm some dude on the internet, to help you understand which way is going to work best for you. And there are a lot of different options. And some companies will say, I only do an asset purchase. Some companies will come back and say, we're willing to do a stock purchase. The thing is you just got to ask. So here's the thing. You got one of three things to do from here. Just one of three. Find the subscribe button. Click on it. Every time I send out a video, you'll get an update. 2, hit follow. 3, share this video with a friend. We'll see you soon. Thanks for watching.